folks, we have the Dow up 203, NASDAQ up 64, S&P's up 34. Let's go over to our man, Mr. Teddy Kekstadt at Forex-Trading-Unlocked, and this couldn't be a better day, folks. We got Powell and the gang out here at 2 o'clock this afternoon, and we are going to have currencies moving big time. Teddy, what's going on, brother?
Yeah, you're right. We have a Fed day, and we definitely have a lot of anticipation in front of what's going to happen this afternoon in the currency markets.
Yeah. So what are we thinking, man? Like,
Well,
just currency-wise,
right now,
what do you think? I'm sorry, go ahead.
I think that the Fed aside, right now, the U.S. dollar is a bear, especially when you look at how it's reacting to the Swiss, the Canada, the yen. That's another one. I think there's a power move going on there. And I don't think anything that the Fed has to say today is going to change that momentum right now.
Yeah. So that would be basically saying that the Fed, I mean, if we just took it on a fundamental basis, I know we're not fundamentalists, but we took it on a fundamental basis, we'd be saying that the Fed's going to be dovish. They're going to have a whole flock of doves flying.
Yeah, absolutely. I agree.
Hey, so, you know, we're just looking at the pound's getting a move, too. It's trying to basically get back inside its range, huh?
Yeah, the pound definitely took another beating, you know, over the past week and a half, and right now it's definitely trying to regroup. And I think that the dollar weakness is going to be what's going to give the pound a leg up now.
Okay. Okay, so just that's you know, I can see that, right? And instead of the pound being strong, the dollar is going to get weaker. Because what the dollar just did, folks, intraday, you know, it took out a B point. It looks like the index itself wants to go down to about 95,400. If it does that, it's going to get back inside its August swing area, which, you know, it's done 3 times in the last 6 weeks, you know. But each time it says, I don't want to be here, and I jump higher again. You know, so.
I think you hit the nail on the head about that, too. It's the dollar weakness that's going to drive these moves. It's not necessarily pound strength and stuff.
Well, you know what's intriguing, too, is that I guess the way that it works in the banking structure right across, not so much as in the United States, but the rest of the world, I was reading a couple articles on Bloomberg, is that they have to buy dollars at the end of the year just to straighten out their books. So it's really intriguing, like, have they done that all the way up to this point, and like they're done? Do you know what I mean? It's like, okay, so is everyone straightened out now? You know, because we're talking about, what, we had 10 days.
Yeah, I'd say it's vacation time, and they might be already set, right?
Yeah.
I think that that's already been done, though, to be quite honest with you. I think the banks ended their year already last month.
And, well, you know, you can see gold's finally caught a bid. You know, we'll see whether we get some follow-through. Silver's the dog, man. You know, this whole silver thing is blowing my mind, actually. I mean, because silver, you know, you get some juice in it today, but silver hasn't seemed to be able to basically do anything, so.
The spread is widening.
Yeah, it is, you know.
Absolutely. I think something would be really something that people really need to pay attention besides the Fed news right now, and, excuse me, and the dollar bearish momentum right now, is to key off the yen as well as the Nikkei. If you look at the Nikkei chart, they're teetering on some lows that are pretty dangerous. And I think that this is an area where if the Nikkei doesn't gain some strength over the next few weeks, we could see a leg down in the Nikkei that would touch off a big slide in the U.S. dollar.
Yeah, and you can see that. And I was just speaking, you know, I'm putting the Nikkei up. And you can see last night, folks, you know, we hit 20,880. The last low was 20,971. And that's a problem. And what Teddy's saying, and it's so correlated, man, when this yen gets strong, the Nikkei goes out of its mind, folks. And, you know, I mean, and gold goes to the moon. I mean, every time if that yen gets strong, I mean, what is that correlation all about, you know?
Gold 1,600 then.
Yeah, no, I'm just saying that it seems the most direct correlation. You know, I've had the gold report like for 16 years now, 17 years, 17 years, and I'm always watching the yen, because if the yen gets strong, gold market has it made, man. I mean, it just freaking goes.
Sure.
It's like, you know, the yen gets down a penny and gold will go up $10. It's like
yen strength, dollar weakness, right? Priced in dollars.
Yeah. But you know, it's pretty wild, man. It really is.
Help it be a golden Christmas then.
Yeah, I like that. Listen, man, you know, Teddy, you know what's so funny is that one of the first this is when I remember the first time I got in gold was $282, $282.50 to be exact. And what ended up happening is that It was messing around like 300 and 320 for a while. And it was on St. Patrick's Day, man, that it actually exploded topside the first time it did.
Okay.
And so there was so many people calling the show saying, they did it just for St. Patrick's Day.
Why not, man? Party hardy. It's a good day.
Oh, I'm telling you, man.
Totally.
You know, so like on a day like this, Teddy, you normally, you're going to wait for this statement, right, before you start trading anything?
Absolutely.
Yeah.
I have nothing going on right now except for a small euro position, but that's got a tight stop in it. Outside of that, absolutely, totally flat right now. I'm looking for the reaction in the evening markets and then looking to get in tomorrow then.
Yeah, cool. Because this is a big
especially
one,
with
man.
the dollar-yen trade, that could be, this bear may really slam this move over the next, it could be there may not be a lull for the holidays at all. We may see some major moves trending into the end of the year next week.
That'd be intense,
That would be great,
man.
yeah. It's a lot to happen by December 31st.
There is a lot to happen, and there's and that's not even saying, are they going to have another vote for Brexit? Are they going to basically, go south? You know what's interesting is that when I heard a couple of these people over there arguing, one of them was just saying, hey, listen, man, one of the analysts at Bloomberg was saying to them, well, are you just going to leave? And the person on the other side said, hey, listen, they have a lot to lose too, because if they just leave, the European Union doesn't get billions and billions of dollars.
Okay.
So there's a correlation there that's pretty big. Do you know what I mean? Like, I think, I had known that, but I didn't really know how big it was. And it's a monster. I mean, it's billions and billions. So it's like they have an incentive also to say, yeah, we're not going to give you everything, but guess what? We leave on the other side, see you don't want to be here, and then try to negotiate the deal after that.
Yeah.
So
That's a good point.
well, it's going to be a wild one, man.
Right.
Well,
right.
listen.
I think the perfect storm is going to brew next year with that, where they're going to settle all this Brexit stuff, and then the EU, if they can get some balanced budgets across the other countries, the majority ones that right now are kind of waddling down towards some bad, budgets and things like that. If they get that hashed out, the dollar could be in one big slide next year, which also could be good for us because the lower dollar, if we have a really big break going into the first and second quarter of next year, that's going to boost earnings for our market. So even if it's fledgling right now under the highs,
Yes.
earnings will be good.
Yeah, that'd be the perfect storm in a great way, folks, for the markets. Meaning
Yes.
the market could go right back up. Because, I got all the interest rates up here for the world right now, Teddy, and I mean, it's still a mind blower that, Germany is a 0.2% on the 10-year. You got Spain that's broke is at 1.3. It's like, really? It's like, but that's what
But
it is.
that's going to change next year because the EU they're done with the QE.
Yeah.
Done.
Gotta love
So,
it.
higher rate.
Listen, folks, you can check out Teddy every trading day. You go to forex-trading-com. Teddy, you have a great one, safe one, and what day is today?
Thanks, guys.
Hey, Merry Christmas, man, because
You too.
it's Christmas.
Take care, guys.
Okay,
Appreciate
man.
that.
Have
Thanks,
a great
Teddy.
one. Have a safe one. Stay right there, folks. Come right back.